Picture this. It's 2020, deep on Wall Street. Giant multi-billion-dollar hedge funds have decided to kill a company for profit. Their target? GameStop. You know that video game store in the mall you probably haven't visited in years? The hedge funds were shorting the stock. It's a fancy way of saying they were placing a massive bet that GameStop would go bankrupt. If the company failed, they'd make a fortune. It seemed like a sure thing, a relic of the past, just waiting to die. But they missed something, or rather, someone. In a corner of the internet, on a chaotic Reddit forum called r wallstreetbets, a small group of regular people were watching. A guy named Keith Gill, known online as Roaring Kitty, had a crazy idea. He didn't think GameStop was dying. He actually believed the company was undervalued. He posted his research, sharing his thoughts with anyone who would listen. At first, he was mostly ignored, even mocked, but he kept at it, day after day. Slowly, others started to see what he saw. They dug into the data and discovered something shocking. The big hedge funds hadn't just bet against GameStop, they'd overshorted it. They'd bet more money than the company was even worth. They'd gotten greedy, leaving themselves incredibly vulnerable. It was a critical flaw in their master plan, a tiny crack in the armor of Wall Street's titans. The Redditors realized that if enough of them bought the stock, they could exploit this weakness. And that's exactly what they did. What started as a few posts turned into a movement. It's fueled by memes, jokes about diamond hands, and a shared sense of rebellion against the financial elite. Thousands of individual investors started buying GameStop stock. They weren't a coordinated group. They were just a digital flash mob, each person making their own decision to buy a few shares on apps like Robinhood. They weren't just investing, they were sending a message. The result was pure chaos. The plan worked better than anyone could have imagined. GameStop's stock price, which had been lingering at just a few dollars, suddenly exploded. It went up 10 times, then 100 times, rising by thousands of percent. The hedge funds were trapped. To close their short positions, they had to buy back the stock they had borrowed. But now the price was astronomical. Every share they bought just pushed the price even higher. This is called a short squeeze, and it was a financial atomic bomb. Hedge funds like Melvin Capital were losing billions of dollars per day. Then, right at the peak of the madness, something unbelievable happened. The popular trading app Robinhood suddenly banned its users from buying more GameStop stock. You could sell, but you couldn't buy. The buying pressure vanished, and the stock price crashed. The public outrage was immediate and intense. People screamed market manipulation. How could a free market app suddenly stop people from buying a public stock? The incident was so controversial, it led to a full-blown US Congressional hearing, putting the CEOs of Robinhood and the hedge funds in the hot seat. In the end, the dust settled, but the world was changed. The GameStop saga was more than just a wild story about a meme stock. It was the first time in history that a decentralized group of everyday people, armed with data and social media, took on the most powerful investors in the world, and for a moment, they actually won. It proved that, in the digital age, power can come from the most unexpected places. It left everyone with a huge question. Was this a one-time fluke, or the beginning of a whole new era for finance? Let me know what you think in the comments below. Thanks for watching, and don't forget to subscribe for more unbelievable true stories.